turned my business around. You know I need to be on top of my game to protect my empire. If you know, you know.
I too need to know what Kapo knows.
Kakasa, be sure you are in charge of your business. Uganda Revenue Authority, developing Uganda together.
Uganda Revenue Authority reminds all taxpayers to file their monthly returns and make all outstanding payments by the 15th of every month. Please comply to avoid penalties and interest associated with failure to file returns and payment of these taxes. For further clarifications, call us on our toll-free line 0800-117-000 or email us on services@ura.go.ug. Please ignore this message if you have already complied.
Uganda Revenue Authority, developing Uganda together.
Wait, Abu, tunamaliriza. And what are you doing throwing papers all over the place?
I'm looking for an invoice for a sound system and cables that I received yesterday, but I can't find it.
You know there is a way of keeping all this in one place and available to you as and when you need it.
I really wish there was one, because the way these invoices grow legs and disappear.
I believe this is what you're looking for.
Now how did it get there?
Tabo! Do you know that with EFRIS, you can stay on track of all your business transactions and improve on your record keeping?
How so?
Kati tuli ku computer with EFRIS. I just search using the fiscal document number and I retrieve the records I'm looking for. Bookkeeping becomes simple after that.
Kapo, awesome, yeah.
I began using URS Kakasa Solutions and now I'm in charge of my business. And you can as well.
Kakasa, be sure you are in charge of your business.
Uganda Revenue Authority, developing Uganda together. Uganda Revenue Authority, developing Uganda together.
In chess, the small one can become the big one. It's the same here. And here too. Watch every move. Record every number so you can plan better. No matter the size of your dream, tomorrow's success belongs to those who keep today's records clean. File your returns today.
Uganda Revenue Authority, developing Uganda together.
Hello and welcome back to our Tax MCHUZI webinar this morning of Thursday, 21st April 2022. My name is Rita Muzira from URA, Commissioner General's Office. With me in the studio is Hafsa Seguia, and we are going to be dissecting our topic today, which is understanding pay as you earn. Welcome back from the Easter holidays, and I'm going to ask Hafsa to say hello before we delve into our webinar today.
Good morning, our viewers. Hafsa Seguia, my name, as Rita has told you. resident in the domestic taxes department. Tax literacy is what we do on a daily. We see that we can create awareness, equip you, nurture you, walk the taxation journey with you. And that is why we are here today once again to see that we can talk about pay as you earn as a tax type, what you need to know, what is not clear to you, how do you compute, and any other issue that is surrounding pay as you earn as a tax type. Thank you.
Thank you, Hafsa. Our dear viewers, we are live on our Facebook page. It's called URA page. Go like it, share whatever is in there. Also, we are live on our YouTube channel. We call it the URA TV. Please subscribe so that you don't miss any of our videos that we upload. Hafsa, right in there, what is pay as you earn?
Pay as you earn is a tax type like other tax types that Uganda Revenue Authority collects. But pay as you earn is PAYE is an abbreviation of pay as you earn. Basically looking at what an individual could earn in formal employment. So ideally, as one gives me the income tax from their business, ideally one in employment should equally give me pay as you earn. But the methodology of collecting it differs, because here we are basically looking at the employer as our agent, the person who will pass on these amounts to us. And this is the person who employs you, the person who gave you that appointment letter, knows how much you have to take home, knows your gross salary. Then at the end of the day, we expect such entities to withhold at source. So that is one of the tax types that we withhold at source. That before these amounts hit your account, before you are paid and get the monies, we want to withhold that portion. That is your contribution that you do to the nation because you earn. And when you earn a salary, it is eligible to tax. It is not, unless it is exempted in one or the other. But in the event that it's not exempted, we are looking at an employee who earns 235 and above. That is where my pay as you earn starts. Because pay as you earn way back, the threshold was 130. I think we've taken...
Before we're going into the threshold, take us through who is eligible to pay this pay as you earn.
Who is eligible to pay as you earn? This is an individual who is clearly employed by an entity, and ideally their income is not exempted. Because when I look at those that are exempted in employment, I will look at those in the UPDF, those in the Uganda Police, those in prisons, those are probably in the missions, because in the missions we have the locals. The locals are not exempted, but we have those that are not Ugandans.
So foreigners are exempted from...
In most cases, it depends upon the arrangement, how they came in, because the Ugandan government must have signed an agreement that is exempting certain incomes. And it clearly stipulates who is exempted. So some come as expatriates on certain projects, and projects are time bound because they cannot be continuous or forever. So we basically look at permanent staff. And permanent staff, exactly. And we look at what you earn. That is where we start.
What constitutes
what
I earn?
Exactly. Because normally we have the basic salary. When your employer tells you your basic salary, when you look on your appointment letter, your basic salary will be say 500,000. But on top of the 500, I am paying you 70,000 for transport. I am contributing 150 for housing. I will be giving you 200 for medical. So whatever is paid to you in cash, we do what we call consolidating that amount. Exactly.
That is your income.
That is your gross.
Gross income.
Gross implies that I have not subjected it to tax. I put everything together, all the benefits together, then I start the taxing bit of it.
And then you start computing
Exactly.
the tax.
Once they give you an amount that you have to use, say, in transport, then ideally that has to be added onto your basic to constitute the gross income.
So you've talked about the benefits like medical, I've had
In
lunch,
cash.
in
Cash and not reimbursements. Because when I say in cash, it implies that I give you 200,000. But you may not get sick this month and you use it for any other business. Then that means I have to add that back and tax it. But if you're under an insurance cover, whereby you can only go there and access the services when you're actually sick, then that we do not add it there. We do not tax that.
Okay.
When you look at transport, and transport is communal, it's a van that goes picking us from the different points as employees onto reaching the office bit of it, then we do not add back that amount. We don't apportion those amounts and attach them to your salaries. When I look at meals or entertainment, if it's given to you at arm's length, arm's length implies that it's a dining or cafeteria arrangement where we all go and consume the same. Exactly. There we don't add back. When I start giving you 150 to go and I don't know whether you will take or you don't take, then we add all those benefits back, then get their gross amount.
What about subsistence allowance?
Subsistence allowance, honestly, we cannot tax it because you're going to spend it for that particular purpose. I'm giving it to you, go and get accommodation, then execute that duty, then come back.
Okay.
That is very clear. In the course of doing business, because ideally I cannot send you to Arua when you're in Kampala. Where do I expect you to reside for the 2-3 days? Definitely I expect you to get somewhere. So that particular amount will provide for your accommodation. For those few days, you will be off the station. So ideally we do not add it back. But when it comes to a benefit, and this benefit should be at arm's length, implying that it should be for us, it cuts across
all employees.
All, exactly. But if it's discriminative, then we need to add it back. Why is it discriminative in one or the other?
No, okay. Now there are some employers who will provide, say, security for their employees. They provide vehicles. They have chauffeurs. Is that also part of the
exactly, because that is part of it, because we might have entertainment. Some of that is called entertainment when I give you a chauffeur and all that. But ideally, when I'm looking at a vehicle, we have a formula in which we compute that benefit entailed there. I will look at the market value of that vehicle. And when I'm looking at the market value of the vehicle, I will multiply it. It's a formula, A times B over C. It's market value times the number of days the vehicle is put to use, is available to you. Because you might have 365 days, but it's available to you maybe about 200 days in a year. So it's a 200 days over 365 times the market value. Then what you'll have to get there, you will definitely multiply it by 20%. Then whatever value is there, we'll have to reduce it by whatever payment has been done initially. So ideally, it's a process of how we compute that benefit to you.
Now we are getting into that.
Because when I give you a vehicle, I am not going to tell you that, look here, they are 5 days in a week. Please don't drive it on a Saturday because you're not going to come to work. It may be difficult.
Don't drive it in the night.
Don't drive it in the night because you stopped working at 5 o'clock. So that is why the law is very clear. We have a formula in which we can compute such kind of benefits to actually ascertain the values we need to pick onto.
Now let's delve into the computation. If you can give us a basic salary and then we start computing. First of all, what are the rates? What are the different bands?
We have different bands. We have a value that does not exceed 235. That is our threshold. Definitely there is no tax there. There is no pay as you earn there.
So if you're earning 235,000 monthly,
then there is nothing.
This is net.
Yes. Then, and sorry, gross. Then below that, automatically nothing. If you don't exceed 235, it is nil.
That is gross.
You may be at the boundary of 235 or even less. Then definitely there is no tax.
And
then,
I think, Afsa, you need to also clarify, does NSSF contributions, is it part of pay as you earn?
It's not part of pay as you earn, because those are statutory deductions that have to happen before my pay as you earn comes in. We have NSSF, we have local service tax. Local service tax is a transformation of what you used to hear, used to be graduated tax, which some of you may not have been around those days, where they used to chase around your fathers, your grandfathers, just across the village. Whoever makes 18 years of age, whether you have income or not, you have to pay. Umusolo gw'omutwe is what they baptize as Umusolo gw'omutwe. So as we are trying to modernize as a country, we are trying to make it a little better in the execution of its collection. That is why we have the local service tax. And it happens to you who is employed, it equally happens to one who is in business. One who is in business will pay it with the trading license. Then you who is in employment will recover those amounts in the first 4 months of the financial year. So that we create is, we don't want to deduct at once. It may be a little pinching to the amounts you remain with. So normally we say let it be deducted within the first 4 months, but ideally that goes to the municipal councils, and in Kampala it goes to KCCA. Okay. You were taking us through the different bands. Yes, so we have an amount that exceeds 235 but does not exceed 335. Ideally, you might have an income, say you earn 310. That means you have exceeded the 235, but you do not exceed 335. So what we do, we get the excess of 235. Normally we get the excess of the lower band, that is 235. So we get the excess of 235 because your gross is 310. Then we subject it to 10%. This is 10%. Or maybe to make it a little easier for those who are viewing right now, we may say that if your salary is 310, that is your gross. When I talk about the excess of 235, it means I have to get a difference in between 235 and 310. So the excess is 75,000. On this 75,000, I have to subject it to 10%. So you tax the excess. We tax the excess. Exactly. So when I tax the excess, I'll have 7,500 shillings. So that if your salary is 310, so your pay as you earn is 7,500. Because the excess was 75,000. Okay. So that is the second band. There is a first band, not exceeding. It's a band. To exactly. The ones who don't pay the pay as you earn. Yes, it's also a band. Okay. So we move on to the third band. So here we are looking at those that exceed 335 but do not exceed 410. So let me just imagine here your salary is about, I would say 390. Let me say if it's 390 and it's in excess of 335. So we get the excess, which is about 55,000. But when I get the excess, which is 55,000, I am going to subject it to 20%. When I subject it to 20%, it will give me 11,000. But I have to add a 10,000 onto that particular amount. So the tax there will be 21,000. That's a pay as you earn. You will need to pay, or that will be reduced on your salary as pay as you earn. And when your employer reduces it via your salary, you're not the only person. They do it to whoever is in the company, then send it to us at the end of the month. So that is how we do it. So the percentages keep on increasing as your income increases. As the word goes, pay as you earn. The higher you earn, the higher you pay. The more you pay. Exactly. So we go to the fourth band. Here I am looking, the fourth band has two in one. I am looking at whoever exceeds 410. Because if you exceed 410 here and you do not exceed 10 million, so I'm looking at a band of 410 but not exceeding 10 million. So ideally here, you can tell me maybe you earn about 6 million, maybe, if I would say, because it's exceeding 410, but not exceeding 10 million. So here I'm looking at the excess of 410. So I'll just reduce your 6 million by 410. I'll have 5,590,000. But I have to subject this to 30%. When I subject it to 30%, I'll be having 1,677,000. But I have to add 25,000. That is what the formula says. So your total pay as you earn will be 1,702,000 in the event that you earn 6 million.
Wow. So it is not a flat
Exactly, it cannot be a flat percentage.
So now take us to those who, the high net worth.
The high net worth. So here we are looking at those that exceed 10 million. In the event that you're paid, say, 12. I may say 12. So here I am basically looking at chargeable income of an individual that exceeds 10. So if it exceeds 10 and you're earning 12, so that means I'll just get my 12 million and I am going to reduce it by the 10 million because we are looking at the excess. So if you look at the excess, it is entirely 1 million, it's entirely 2 million. So if I get my 2 million, I have to tax it at an additional 10%. That is 200,000. If I'm taxing it at 200,000 here, then I'm going to add on the other that I got that does not exceed. That's why I said it's a 2-in-1. I first compute what is not exceeding 10 million. Then I come here and add what exceeds 10 million. Then I add that 2, then off you go, because I remember we had got something like 1.7. So here I will just say this is 200,000 plus about 1.702. Then I will be getting what you pay as you earn.
Okay.
Yes.
Wow. Thank you so much, Hafsa. We are live on our Facebook page, URA page, and also live on our YouTube channel, which is called the URA TV. We are dissecting pay as you earn. What is pay as you earn? How do you compute it? What does it institute? Hajat has told us it institutes all the benefits you get in kind and also your salary, and she's taking us through the different bundles. It's not one percentage rate that is 30%, no. It depends on your salary, the different bands, and then that's how the tax is computed, that which is in excess. Hajat, we are continuing.
And maybe what we need to talk about is the non-residents. Because what happens, you may be, say, you may be a director, and you're a director in a company that is in Uganda. So what happens, the income is sourced in Uganda. And your arrangement is you decided to be paid like any other employee in the company. So what happens if you're non-resident? We also have rates, but these the percentages are slightly higher because we have to create a difference in between a non-resident employee and a resident.
So a non-resident pays a little more higher.
A little more. Let me just give you an example. Because when you're a non-resident, for a resident we started at 235. For a non-resident we start at 335. So what happens, whatever exceeds 335, it will be 10%. Yes, that may seemingly appear the same. But here if I'm looking at what exceeds 335 but does not exceed 410, here when I'm looking at my rates, I will charge you definitely 20% of the excess of 335 plus a 33,500,000. Yet when I was looking at the resident, I do not add 33,500. I only add 10,000. So it depends on what bracket where you fall, but what we should be cognizant of, if you're non-resident, the brackets move differently. The rates move differently, but the brackets are the same.
Oh, okay.
Yes.
You have taken us through how it's computed. Now we
Yes.
want to discuss the obligations.
The
What are the
obligations.
obligations? You've told us that this is a tax which is collected by the employer on
Yes.
behalf of URA, and then they'll
Yes.
remit it to URA.
Yes.
So what are the obligations? When do they remit that tax? If you can just take us
We
through.
have obligations on either side. One side is for the employee. You have an obligation to furnish a tin to your employer.
Okay.
That means you must have applied for a tin. Because ideally it's in your favor. Yes, I may be preaching about it as URA, but it's in your favor. Because whatever credit happens against you, let it be identified in the ledger against your tin.
Okay.
Because that shows you have been a tax-paying, a compliant client. But when you don't have a tin, that means your employer will be left with no choice, and they will be summing up everything. It will fall under miscellaneous. Okay. Then at the end of the day, what does miscellaneous mean? Let me just give you an example. You might want to process a visa. And with certain embassies, they are very, very strict. They will want to know, what do you do? What proves to us you have been working in that institution? And how sure are we you're coming back? You're not going to get lost in that country. So these are some of the things you show. I'm a compliant client, and by the way, I've paid pay as you earn for the last 10 years. This is my record. Because at times they even ask for a tax clearance certificate.
How do I access that record? How do I know that my employer is actually remitting my pay as you earn to government?
How do you know your employer is remitting your pay as you earn? It's very clear. There is when you log on via the portal, there is where you can get a tax a credit certificate on your behalf and see what happens in your ledger. If that fails, then you can come to URA. We can give you balances to see what exactly happens. But insist that at least you give a TN to your employer. That is one of your obligations, you the employee. Then the employer, the employee is this person they employ and pay a salary. The employer is you who comes up with this institution, and you call in for people. I need an accountant, I need an auditor, I need an IT specialist, I need this. So you are the employer. At the end of the day, you're the one who's going to make these payouts. But before you make these payouts, one, ensure that whoever you're paying out has a TIN, has given you a TIN. It's in their names. Two, ensure that you represent the amounts on their appointment letters. Because you may represent lower figures so that they could give you a lower pay as you earn figure. Then at the end of the day, things are not exactly, they are not adding up. Then thirdly, the other thing you should make sure that you ensure with your employees, ensure that if they are getting a secondary income, ensure that you're going to charge it at 30%. Secondary income happens how? Because I might be half working in URA, but in the evenings I go to a university and I am teaching. So when I'm teaching, that becomes my secondary income. And my secondary income is clear in the law, it's charged at 30%. Irrespective of the value, it is charged at 30%. It's the same that we apply to people like councillors, the political leaders, because we assume that councillorship will not engage you the whole day, neither will it engage you the whole week or month. You come in to sit in meetings maybe once a fortnight. So that implies that there's something that you are doing that occupies most of your time. Because this is not a job, it is a calling to serve. Yes, it has some allowances here and there for transport and all that, but that is where we get the strength to get taxed at 30% because it's a secondary income. So you have to be clear when you are remitting your return. How are these people? Do they spend most of the hours in your place? So if they are not spending most of the hours in your place, then they cease to be full-time employees, they are part-time. And when they are part-time, they'll fall into the other bracket.
The 30%.
Exactly.
Regardless of how much.
Exactly. And the other thing is to ensure that you deduct the local service tax. Because once you don't deduct it, then we will assume that you deducted it. Then the municipal council or whatever will come up and ask you for that. And maybe NSSF still ensure that you deduct it, because you're doing a disservice to these employees. At the end of the day, they will make a retirement age and they'll need to move out. But which package are they moving out with? You yourself, you may not have a conducive package, but at least let them have your small package, then go to NSSF and have whatever it is. Now people are getting 20% midterm access. Don't you think it's good to get your 20%, which is about 10-20 million? It gives you a push, because it's giving you a push at a later age. Where if you fail to even buy a plot, now you can even buy a plot when you're still in employment. You still have some few years, so that by the time you retire, then you won't be renting. So
thank you so much, Hafsa. Yes. We've come to the end of our webinar, and what is your last message?
Our last message here is to our clients out there who are registered for Pay As You Earn. By the way, if we register Pay As You Earn, we register the employer. We do not register the employee. Fine, they are picking from your salary, but Pay As You Earn appears on the tin of the employer. A message out there would be, one, to thank the employers for having accepted to employ this number of people, most after COVID. Most of them started cutting down the sizes. They started downsizing when COVID started. But at least those who maintained them would like to thank you very much, because whenever you maintain them, I'm sure the Pay As You Earn has to come through, and I will be collecting it. Then maybe to at least appreciate you for having contributed to national development by helping us get or tap into that particular kind of income and getting that tax, getting it to us by the 15th date. For those who haven't done it for the month of March, please do it. We still have some time. Yes, it's after the 15th day, but at least better late than never. It's better than us coming and assessing you and estimating you, pushing that Pay As You Earn return. Then we can see what is on it, then see how you can make it good. I think that will be all for today. Thank you very much, and thank you for giving us the time, being with us for the minutes we have spent. I should imagine they've added some value onto yourselves. Absolutely. To be better people, to walk the taxation journey better, to avoid the penalties here and there. It would be absurd to get a penalty because you've given us a return late, yet the return has employees and most of them are below the threshold. Then ideally, what led to that delay? Because these are people that you do not increase salary every day. You know they are still below the threshold. Ideally, please just represent them there. Then off we go and wait for the following month.
Thank you, Hafsa. Thank you so much, our viewers. We have come to the end of our webinar for this week. We've been dissecting the Pay As You Earn, what it entails, how you compute it, and the different bands and the different benefits. See you next time. I have been Rita Mzira from URA together with Hafsa Seguia. We will see you next week. Bye.
Couple, you seem to be in a hurry. Where are you going to?
I'm gonna pay URA a visit.
Why would anyone visit URA? Of all places?
To know more about the Kakasa business solutions, namely digital tracking solution, the voluntary disclosure program and electronic fiscal receipting and invoicing solution, which have turned my business around. You know I need to be on top of my game to protect my empire. If you know, you know.
I too need to know what Kapo knows.
Kakasa, be sure you are in charge of your business. Uganda Revenue Authority, developing Uganda together.
Uganda Revenue Authority reminds all taxpayers to file their monthly returns and make all outstanding payments by the 15th of every month. Please comply to avoid penalties and interest associated with failure to file returns and payment of these taxes. For further clarifications, call us on our toll-free line 0800 117 000 or email us on services@ura.go.ug. Please ignore this message if you have already complied.
Uganda Revenue Authority. Developing Uganda together.
Wait, Abu. Tunamaliriza. And what are you doing throwing papers all over the place?
I'm looking for an invoice for a sound system and cables that I received yesterday, but I can't find it.
You know there is a way of keeping all this in one place and available to you as and when you need it.
I really wish there was one, because the way these invoices grow legs and disappear.
I believe this is what you're looking for.
Now how did it get there?
Tabo! Do you know that with EFRIS, you can stay on track of all your business transactions and improve on your record keeping?
How so?
Kati tuli ku computer with EFRIS. I just search using the fiscal document number and I retrieve the records I'm looking for. Bookkeeping becomes simple after that.
Kapo, awesome, yeah.
I began using URA's Kakasa solutions and now I'm in charge of my business. And you can as well.
Kakasa, be sure